good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Thursday, November the 7th, 2013, and here is today's After the Bell market summary video. Before I get into the market analysis, I want to remind you guys to go check out the website, wallstreettrading.com. There's a lot of informative information on the site. At the same time, you can find our videos there and our blog with a whole bunch of educational information. Aside from that, let's go ahead and jump into this market analysis. Oh yeah, one more thing here. If you're interested in taking our education course, you can contact me at ccooper at wallstreettrading.com, or if you're interested in finding out more details on how you could join our trading group at the prop firm, you can contact me at ccooper at wallstreettrading.com, or you can use the contact us button on front of the home at the home page um, at Wall Street, again, trading.com. All right, folks, let's go and talk about this market here. We had the Dow Jones down 153 points, the Nasdaq was down 74.5 points, and the S&P 500 was down 23 and a quarter. If we take a look at the breadth on the market, we had 5,079 issues declining on the NYSE, Nasdaq, and the Amex. We had 1,244 issues advancing on the NYSE, Nasdaq, and the Amex. So definitely, breadth was in favor to the bears today. A little close to a 5-to-1 ratio there. So there was definitely some heavy selling today. There was one thing that that if you've been watching the markets for the past 3 months intraday, or for for the for the whole year intraday, we have not seen really some, well, actually, let's say the past 3 months or so, right? We have not seen the type of selling we had today, really, where we had nice fall through action, nice little bear flags that hit their measured moves. All right, prior intraday supports were breaking down and rallying back up and acting as resistance on the retest. Definitely a day that the bears were in control. Again, moving average rallies were shorted. I'm sorry, rallies into the moving averages were shorted. So there's that good sell side action that you get when there's definitely some recognizable profit taking, which is what we had today. So let's go ahead and break down the chart, starting off with the SPY, the S&P 500 ETF closed at 174.93. You can see we were down two and a quarter. We were down two and a quarter, down 1.25%. 174.93 is what we closed at on the ETF here. You can see we closed right on top of the rising 20 EMA and SMA around 174.93 and 174.54. Again, that's an EMA SMA. The next level, well, before I go to that, you can see one thing that we were looking for was this key trend line, right? We discussed in one of our prior videos here that we have to watch the price action here, because we chop around this key trend line. We do not hold above this key trend line from the breakout of these prior pivots that we had, and this could be a bull trap up here. So let's take a look what's going on. All right, for the past 2 weeks, let me zoom in a little more here. For the past 2 weeks, we've been trading in this range between, say, 174.75, or 175.75, and let's call it, say, 177.75. So this big range we've been trading in for the past 2 weeks or so. We broke below that range, so as long as we go hold below this 175.75 area, just call it 176, we should see some more selling pressure as this wide range bar, all right, just engulf the prior 1, 2, 3, 4, 5, 6, 7, 8 sessions here. I mean, just look at the range of this bar, okay, guys? The top of this range we had today to the bottom of the range. All right, we just gave back. That means anybody that was sitting in the market trading sideways that did not make any returns on their investment, if they were trading the S&P 500, obviously they're trading individual stocks. Those stocks could have went up or could have traded lower, could have traded worse in the market, or could have traded better in the market. But if you're trading the general market, all right, which some of these fund managers and investment managers are doing, they've been sitting in this market and not making any type of returns for the past 2 weeks, and now they see some selling pressure, and now they're possibly in a losing position if they're along above 176. So this is definitely a wide range outside bar from like the prior couple sessions here. We should see some more fall through tomorrow. Any rallies into the 176 level should be attempted, at least for sure. At least we're going to try that. We'll see how everything opens tomorrow. Of course, everything can change tomorrow, but we would be interested in shorting the market if it was to rally back up intraday to 176 or 176 and a quarter, 176 half or so. We'll see. Pretty much anywhere in the lower 50% of this bar, we would want to gauge that retracement and see how the sellers come in, if they come in. And if we break below today's lows and we break below these 28 moving averages, which we've been holding above since back here, say from back here early October. All right, then we could definitely see some sell side action to retest this prior pivot high, which should act as support. All right, it was prior resistance. We broke above that prior resistance right here, so it should act as support. If we do not hold above 173.50, then the next area that I would watch is down here around 171. But before 171, I would watch this 172, which you have a rising 50-day exponential moving average. So keep an eye on that. All right, we take a look at the ES on my little small chart right here. You can see the same thing for the ES. It broke past this resistance right here, traded in the range. Anybody sitting in the ES has not. That's been in a swing trade. They have not been getting any returns on their initial investment, and now they're most likely to lose a position. So we'll see what what happens here. Because if we get back above the range that we just broke right here, then we start trading back. This will just be looking a little shakeout and an initial little test of the 20 moving average. However, if we break below the 20-day moving average on the ES chart, which is around say 1740, we can definitely get some nice selling pressure. I would say back down towards our 1720 level. Obviously, it's not going to happen in one day, but we could see some little slow selling pressure towards that level if we have another fall through sell candle tomorrow. So just keep that in mind. Let's take a look at the triple Qs, the Nasdaq 100 ETF closing down 1.5%, down 1.88% at the bottom. Well, it broke below the little range that we had that was in the upper part of the big range right here. If we break below 81 and a half, or if we hold below 81 and a half, I would expect we have this little gap fill target right here, which I'm pretty sure may get filled tomorrow around say 80.90. We break below 80.90, you want to watch the 79.72 level, which would act as support because it was prior resistance from this little consolidation we had right here before they marked the market higher. So keep an eye on that 79.72 level from this prior resistance that broke out, so it should now add some support. And that's also going to line up with the rising 50-day moving average. So the Nasdaq is actually setting up pretty interesting here because you have the prior pivot highs that we broke out going to act as support, and you also have that rising 50-day moving average. Not only that, but the Nasdaq stocks have been trading stronger, so we'll definitely be doing some research to see what stocks are going to be have sold off into support or going to sell into support in the next couple of days here. So, and we'll be looking at those names to gauge the pullback and the retest and see if they form some type of hammer and start moving back to the top side. Again, we'll keep you guys posted with that. I know I've been slacking on the videos a bit, but we've been really swamped over here as we have a lot of people contacting us on the education course, and just a lot of things going on, folks. We're trying to put together a webinar, a whole bunch of different stuff. So you want to make sure you're involved. Again, follow us on YouTube. So you can follow us on YouTube. You can follow us on Stock Twitch, which we've been pretty active on now recently, getting back active on the Stock Twitch, Twitter, and of course our Facebook company page, Wall Street Trading. So the Nasdaq definitely looks like it wants to get some selling pressure right now, and we're going to be taking a look at a couple stocks. Well, let's go ahead and do that right now since we're looking at it. Apple down over 1.5% today. Looks like it's going to be breaking down out of a bear flag here on the daily. We have a wide range sell bar, sell side, little sideways consolidation in the lower 50% range, and now we had a break and close below that lower range and this big bar right here. Should be looking for Apple to maybe follow through down towards this 50-day moving average around 499.25. Let's call it 500. And then you also had this little prior pivot high right there that we broke out, which could act as support as well, which is I would say right there around 4. Let's see, that's going to be around 496.18 or so. So keep an eye on that 496.18. And we had this big sell bar. We consolidated in lower 50% range of this bar. This is a bear flag. You'll be able to see the bear flag much cleaner if you look at like an hourly chart on it or something. Let's take a look here. You can see little, well, you have your little sell side action here. 1 second. All right. You have your, well, you have your little down move, sideways consolidation, which of course is usually indicative of a move lower, and we got that move lower today. And it came like in the last 2 hours of the day when Apple really started breaking down once it broke below that 516.50 level or so. So Apple does look like it wants to come in a little bit. Keep an eye on that name and those levels that I just mentioned to you all. Netflix was down 2.5% today. All right, this one really has just been chopping around the lower 50% range of the big sell bar that we had from the earnings date when it gapped up huge and sold off a lot. So right now, Netflix, again, we talked about this Netflix chopping around the lower 50% of this range, and so far It's been doing exactly what we expected from it, and we're really not trading the same right now. We're just watching it as it's trading that little range. Let's see, GMCR. I know this is not the Nasdaq, but I did see it looked like I wanted to sell off yesterday, so I just wanted to bring it up right now. And GMCR, another name to keep on your radar. This thing may want to go to gap fill. Well, actually, it broke gap fill. So the next support in this stock is down here, really around 53 or so. Again, this name does not. Well, yeah, it does trade in the Nasdaq. So there you go. GMCR trades in the Nasdaq, and it's looking weak. Keep this one on your radar for the short side. I was looking for some technology stocks, but again, this just came to my mind here. Amazon, AMZN. This was down 3.5%. Again, another stock that we said you want to wait for the pullback. You do not want to be buying the name up here. It consolidated for about 8 sessions, and then it broke down today, and now the gap fill is all the way down here around 3. Let's say call it 332 and a half or so. If it comes back to that level, that would definitely be an area to catch a nice scalp off of, and then we'll see how it goes from there. So we're keeping this one on watch, and then if it pulls back anywhere near the around the 320 area, that would definitely be a good pickup, or better yet, 315 or so. That would definitely be a good pickup. However, I don't think it's going to pull back that much unless there's some real heavy selling pressure in the technology sector, which again, this sector has been showing relative strength. So we gotta gauge these stocks that are pulling back that were strong, a week or so ago. But Amazon, we're keeping that one on the radar. Oracle got a nice little pop yesterday. Keep an eye on this name. Definitely looks like it wants to start trending higher. Again, just getting some selling pressure from the market action today. Um, Oracle, I believe HPQ popped up earlier this week on Monday. All right, this stock has been trending up pretty nice. Popped up today, broke over. Oh, not Monday, sorry, Friday. Broke over Friday's highs, pulled back in. May need to consolidate a bit up here. Uh, what else are we looking at here? Intel, the semiconductor names, those stocks have been strong as well. All right, Intel gapped up today, sold off a little bit, not much there. Let's take a look at CLAC and some of these other names, Texas Instruments. All right, CLAC pulling back after rallying up from the earnings reports, pulling back now. Not really seeing much there at the moment. Texas Instruments, TXN. Guys, we're going to go through a lot of names today just to get a gauge of the market, see how stocks are looking and which sectors are doing what. So join in on the video. Let's see, TXN. Let's take a look at Cree, another little semiconductor stock that we like to watch. This one's breaking down. This one does look like it wants to sell down towards this, let's see, 54 area. So I'll definitely keep this one on watch tomorrow. I'm actually going to put an alert on my chart right now. Take a look at that Cree. Looks like it wants to get some backfill action for sure. Let's see here. And what else do I want to look at here? Microsoft. This stock has been a very strong stock here for the past 2 or so months. Again, very strong day. Yesterday, pulled back a little bit today. Still keep this one on your radar, as this one has a lot of potential if it can hold above 37.50. Just look at the monthly chart. Yahoo, Google. Let's take a look at those names. Yahoo pulling back. Yahoo, interesting little downward trend line right here. You could draw in a little support trend line down here. Could be forming a little descending triangle. Again, we got to wait and see, because if it breaks back up with the descending triangle, then we're just going to say, okay, this thing's in the range between 35 and 32. So keep Yahoo on the radar. If it breaks below a 50-day moving average, or breaks below these little pivot lows down here around 31.70, may want to pull in a bit. But Yahoo is still another stock that has been a strong leading stock for the technology and those names there in that sector. Keep it on your radar. Google, another strong name, pulling back down 1.5% today. Looks like it had trouble breaking over 1040. Support is going to be right here from the low that it made on the gap up, on the big gap up it had around 975. It's also going to have some support at this 1,000 level. I will not be surprised if it flashes below 1,000, hits this 990, rising 20-day moving average, and tries to pop back above 1,000. I'm pretty sure a lot of traders out there are watching the stock to see how it reacts around these key averages, since it's a name that has been doing pretty well. Let's take a look at the financials. All right, Goldman Sachs. Excuse me, 1 second. Goldman Sachs. All right, we mentioned the fact that we had to watch out for this 50% retracement, or this 50% trend line from the channel. You can see we have not been able to break above that 50% trend line. So big reversal bar, outside bar. Goldman Sachs, you want to look for it to come back down towards this 155.81 level. But guys, just look at how alone just drawing a 50% trend line, okay, on your channels would have kept you little bit cautious if you're getting long Goldman Sachs up here, especially we had a nice little attempt to break through that 50% channel yesterday, and then we sold right below it today. All right, again, outside bar. Anybody that's been long Goldman Sachs for the past 8 days and they're still long, they're pretty much in a losing position right now. So they've been sitting in a stock that has not paid them any type of return. I'm pretty sure they'll be looking to dump this just to get out for a flat or for a small loss. As if the market goes down, the market continues with a follow through sell side candle tomorrow. We could see some nice selling pressure early next week. Again, we'll see. Do not want to get too ahead of ourselves. Goldman Sachs, J.P. Morgan down a little over close to 1% today. All right, still holding this little rising 200-day simple moving average. Again, if this name sells off and it breaks below last Friday's pivot low, we want to be looking for this thing to come back down towards the 50 quarter level or so, maybe even 50 level, just call it. Let's see. What about Bank of America? Bank of America down over 1%. Wells Fargo down over 1.5%. Right, Bank of America cannot hold above 14. Looks like it should be making its way back down towards 1360. If it was to sell off to these rising 200-day moving averages there, I'm pretty sure a lot of people would be looking to maybe at least start to establish a position right there. And that's around $13.25. Last but not least, let's take a look at Citigroup and Wells Fargo. Citigroup held up pretty well today, only down 0.5%. Wells Fargo's looking pretty interesting because it's coming back in this little key level. How's the key level? Well, if you guys look at this consolidation we had back here in June, that's a breakout level. You can see they've been chopping it around that area, So 4150 is definitely a key inflection level that you can say, okay, above 4150 we're bullish, below 4150 we're bearish. So we're about to go back below 4150. If we hold below 4150, look for Wells Fargo to maybe start making its way back down towards 41 and possibly 40 half. We'll see how that reacts, but keep in mind that 4150 area or level. And Citigroup again only down 0.5% today. I would say it held up the strongest out of all the financials. However, it does look like it's going to be making its way down towards 47.50 or so. So keep this one on your radar as well. Financials, you can get a good gauge the financial sector by just watching the inverse ETFs such as FAZ or FAS. FAZ sees this big breakout bar. Should get some follow through action tomorrow. And then, of course, you can see FAS should have a big sell bar, which it will. And you can see that here down 3.5% big sell bar there. What about the energy stocks? ExxonMobil, Chevron, these names have been pretty strong. You can see ExxonMobil, very strong stock. Even if it pulls back, we'll be looking to buy this one on dips when it's ready. But nice big up move. Earnings report, the investors took that as a positive note for the company. You can see how it traded higher after that earnings, and now it looks pretty good. So we have these large major integrated oil and gas companies, ExxonMobil and Chevron, trading pretty strong. They're just pulling back right now with the market, but they have been showing a little bit of relative strength. ExxonMobil more than Chevron, of course, but keep these names on the radar. Let's see, COP was down close to 2% today. A lot of the natural gas stocks got hit. I'm not sure if it had to do because of because of CHK, Chesapeake Energy's earnings report, but a lot of those names got taken to the woodshed. You can see CHK down another 3% plus today or so. So again, these names CHK, SWN, all right, DVN, all right. Maybe some names you want to put on your radar. They may have some more sell side action. Look at Devon Energy. All right, definitely looks like this is a sell setup. Big sell bar, bounced off the lows, got smacked down today from the sellers. Would be setting up a short trigger below yesterday's lows. All right, which that happens to be 59.28. So I'm just going to put it on alert to a sell alert at 59, say 23 or so. We'll see how that acts. All right, so the energy names have been under pressure. CLF, the basic material stock, CLF, which has been strong for the past month or so. Pullback action today. U.S. Steel, X. These may be some names that we will be looking to buy them on the dips or at lower support levels. All right, maybe not the first support level, but we'll definitely have to check them out. All right, so U.S. Steel has a good level to watch at around this 23 handle. All right, you can see support, range, broke out, follow through. We'll be looking for a pullback, maybe the 24 to 23 is a good area to try to pick some shares up for the cheap if it gets back down there. Let's see. Let's take a look at some other technology stocks here that I missed. Priceline, big technology name. Down $35 today, sitting right on top of that 50-day moving average. Looks like they have earnings, or they had earnings. Let's see. They have earnings after today, after the market closes. I should say they had earnings because the market's closed, right? And they did pretty well. Looks like the stock's shooting up on that report. We'll see how it looks tomorrow morning. Let's see what else. Anything else I want to cover? Healthcare. We know the biotech stocks been selling off. Consumer goods, consumer discretionary stocks were weak today. So watch those retail stocks. Utilities were not a place you could have ran to for safety today. Let's take a look to see how gold trade. Let's go through the commodities real quick. Gold. All right, gold was down close to 1% today. I'm surprised this did not get bought up if people are running for the safe haven trade, which does not look like the case right now because gold would have closed higher. So gold, keep an eye on if it comes down to the 1271 level, 1271 an ounce. Keep an eye on that. GDX gold mines, they've been showing some relative strength. I'm pretty sure they pulled back a bit today, and that may want to come. The GDX may want to come back down to 23 and get a recheck of that low, maybe even flash below it a bit if we want to see these gold miners come right back up. Um, so we'll see if GDX goes to that 23 level and chops around it, then gets back above 23 and holds a nice little higher pivot low. Then we'll be looking to possibly start looking at these gold miners again to the long side. But right now, looks like the recent action was just a short-term bounce, and now they're going back towards those lows. So we'll gauge the sector as such, and we'll see how it reacts, how it trades going forward. Pocket of strength today, PRU. Not sure how it closed. Yeah, PRU shows some strength today. Earnings report. I guess the numbers were bullish. They took it to the top side. Let's see some industrial names. GE down 1% today. Still looking pretty good. Let's take a look at some of these other names. Caterpillar. Again, the biotech sector is the weakest sector out there right now that I'm seeing. I think it just has to do with profit taking since that sector has been pretty good throughout the year. Caterpillar just trading in a big range. There's better names out there to trade, but you can see this one's trading in a range between 82 and say 89 or so. All right, there's better stocks to trade out there. However, the market does get slammed. Caterpillar could maybe try to break below its 83 level, and we'll gauge it from there. Let's take a look at FCX real quick. I always like to take a look at this thing. Let's see what's going on. FCX big sell bar. Yep, this is one that we'll be watching tomorrow for a sell side action. You can see it has a nice gap fill all the way down to 35. You can also see it close below the 20 EMA and SMA. I like FCX. Keep this one in your radar. Actually setting alert for it right now, so I don't forget to do that tonight. And that's what we have on watch right there. Let's see, one more financial I want to take a look at. Morgan Stanley. All right, looks like it cannot break and hold above the 50% line of that channel. And it looks like it's going to offer a short selling opportunity today to below today's lows towards the 28.10 handle if it was to sell off. What else? Let's see here. Tesla, another momentum name. Can't forget about that. Tesla, whoa, getting hit here. Would not be surprised if it got a nice little bounce off this 120 level, 119 half level, off the touch of that rising 200-day exponential moving average. Off the first touch of that rising 200-day moving 200-day exponential moving average, you should be able to get a nice little scalp long there. So we'll see how that acts when it gets down there, if it gets down there. Aside from that, folks, don't want to make the video too long. There's a lot of stuff to do tonight to research on. Have a great day. I'll catch you guys bright and early tomorrow. Make sure you come check out our chat room, mywallstreettv.com. If you would like to get access to that room, make sure you go to the website, fill out the form on the right-hand side, and you will be all set, folks. Have a great day. We're doing pretty well in the chat room, so you want to make sure you come check us out. And if you're interested in trading with our prop firm, with our group, or if you're interested in our education course, contact me, ccooper at wallstreettrading.com. Good luck, good trading. If I don't see you guys tomorrow, have a great weekend. Cheers.